Hi, I am James Hodge, and in this video, I am going to walk you through the account groups in governmental accounting. In governmental accounting, there are three categories and account groups of funds. They are governmental, proprietary, and fiduciary. The concept of a fund is going to be very fundamental to governmental accounting and reporting. And the reason for this is because it assists in carrying on specific activities or attaining certain objectives in accordance with special regulations, restrictions, or limitations. So why are there multiple fund groups? The diversity of governmental activities and the need for legal compliance require multiple funds. When we think about a fund, this is going to be an independent, distinct, fiscal, and accounting entity with a self-balancing set of accounts. Items in a fund are segregated because they relate to activities or objectives that are subject to special regulations or limitations. When we think about a fund is going to record a few things. First is going to record financial resources. This is also going to include things like cash. A fund will also record deferred outflows of resources. It will record liabilities. It will record deferred inflows of resources. It will record residual equities or balances. And it will also record changes in any of these items. The key point to remember is no more than the number of funds that are required by law and efficient financial administration should be created. If you think about the funds, recall what I said earlier. They are going to be classified as governmental, proprietary, or fiduciary, and they will be classified in these groups depending on their activities and objectives. Let's take a look at governmental funds. Governmental funds emphasize fiscal accountability. They ultimately account for the non-business activities of a government and its current expendable resources. Most often, this is going to be taxes for state and local governments. Because of the short-term focus, governmental funds will use what we call the modified accrual basis of accounting with a current financial resource measurement focus. When we talk about the modified accrual basis of accounting, this is where we record revenues in the period they are measurable and available for spending, and expenditures are going to be recognized when they create an obligation to be paid by the government from current financial resources. So that is going to be a key there. There are going to be 5 types of governmental fund classifications. Those types are the general fund, the special revenue funds, the capital projects funds, the debt service funds, and permanent funds. These fund classifications will be covered in detail in another video. Now let's take a look at proprietary funds. Proprietary funds emphasize operational accountability. They account for the business type activities of a government and its economic resources. The emphasis of proprietary funds is going to be on operating income, changes in net position, financial position, and cash flows. Because of the nature of proprietary funds, they are going to use the accrual basis of accounting with an economic resource measurement focus. This is essentially the same basis of accounting and measurement focus used by business organizations. Under the accrual basis of accounting, revenues and expenses are recognized when an exchange of economic resources occurs or when there's a non-exchange type transaction such as taxes, grants, and contributions being recognized. Proprietary funds typically serve defined customer groups and generally are financed through fees that are charged. There are 2 types of proprietary funds. They are classified as enterprise funds and internal service funds. Again, these funds classifications will also be covered in detail in another video. Finally, let us look at the fiduciary funds. Fiduciary funds provide operational information about the fiduciary activities of a government. They typically have an economic resource measurement focus, they use the accrual accounting method, and they report capital assets, long-term liabilities, and deferred flows of resources. These funds include pension trust funds, typically for employees, investment trust funds on behalf of other governments, private purpose trust funds that have specific benefits, and custodial funds. These are fund types that will hold activities that are not reported in any of the trust funds just described. These fund classifications will also be covered in detail in another video. To recap, a fund is an independent, distinct, physical, and accounting entity with a self-balancing set of accounts with items segregated by related activities. Funds are classified as governmental, proprietary, or fiduciary, depending on their activities and objectives. I hope you found this video helpful in understanding the account groups in governmental accounting. It is truly the foundation of governmental accounting. If you like this step-by-step instructional video, please check out more topics in the Basic Accounting video series.